Welcome to the end of day review for Thursday, the 7th of December 2023. Starting off with the economic calendar, as you can see, we've only had red folder news for the New York session. The actual and forecasted results were pretty much in line with each other, so there wasn't real bias influence by the news release, which is fine, I guess. So in terms of the London session, there wasn't anything. There was this to consider for the New York session. However, it didn't really influence us not trading earlier in the New York session. Jumping quickly into the charts, starting off with GBPUSD. As you can see, on the 4-hour, bullish market trend is established. We then spoke about how we created this pullback phase primary leg, and that we can both long and short. However, in terms of the daily, what you can see is we had 3 bearish candles, and then it was anticipated from this morning that today will close bullish. For that reason, we were only considering longs for the day, and yeah, that's pretty much what it looks like will play out. So we were looking to long, and it lined up quite nicely with this pro trend OB. In terms of the 30-minute, what you can see is we had this nice supply chain, and then obviously we had a shock, but we didn't have evidence of demand failing or demand holding or areas where demand could hold from. So we got short from this, but like I said, the daily bias didn't allow for it, so this was an invalid trade, and thus not worth considering at all. Then moving on to the 15-minute, what you can see is as the Asia session came to an end. I don't know why it's not loading. Sorry. Give me a second. So as you can see, as we came into the out of the Asia session rather, we created the low of the day pretty much an hour or two, actually an hour before, 2 hours before Frankfurt, and from then we'd had 15-minute change of character and then multiple supplies failing along the way. However, at no point was it immediately obvious that demand is holding, and thus we couldn't really validate a long based on this. Then moving over to the 5-minute, what you can then see is from Asia we reacted to this pro trend 4-hour OB, and then we changed character, which then validated the creation of this primary leg. Like I said, on the 15-minute we didn't have evidence of demand holding, and similarly on the 5-minute we didn't have it either, and thus we couldn't validate any entries from these areas. However, what we could do, because we've built this primary leg, is we could find an area to support a secondary leg being built. So just before New York Open, what you will see is we've got this London range right here, and on New York Open it pretty much wicked below the range, thus liquidating one side of the range and enabling us to trade. Then moving on from there, you had this 5-minute change of character right here, and then from then we came into this demand OB. We wicked it because of the news release. However, then we broke structure. As you can see, there's a proper pullback here, so I was happy to accept that, we just wicked this OB and demand is actually holding. We broke with a body break, and we went up, and we just about nicked the high of the day. So here we got a New York creating a high of the day. When New York creates the high of the day, this is often an indication that the daily direction bias is indeed long. For that reason, I then had a proper demand chain to base on, and we also had this Fibonacci from earlier, if I can find it, to anchor ourselves to that and the low of the day. And then because we're trading essentially some sort of New York continuation, I was happy to enter around this 50% level right here. And given that we moved quite a bit and there wasn't really a reason to short for the day, I didn't anticipate price coming this far down. It was more likely to come into this OP and then shoot up, so I was happy to use the 11% level of the fib rather than covering the low of the day. However, as you can see, price actually came down and took us out. This is roughly a 20 pip stop. Had I entered differently, covering the low of the day, this is 25 pips, 25 times 375, so it's still within our max pip range. However, I just judgmentally I didn't see the need for such a large stop loss, which is fine. I accept my decision, and I guess that was just how it's meant to be. And then since then, obviously, I took this loss, I took this loss, and now we pretty much just trickling within this range. We may or may not break this this high of the day, but yeah, PA is not looking great. We're in a lot of ranges lately, especially yesterday. We were in this range for pretty much the entire Asia, Frankfurt, London, New York session, and then towards the end of the New York session we broke out, and perhaps the same thing's going to happen today, or we're just going to stay in this range. Either way, I took the loss. I guess it's just December price action, and as we go deeper into December, the volume's probably going to dwindle a bit more. But yeah, for now, I took the loss. I accept it. I'm happy with the judgment I made, and I stand by it. There was potential for you to close this trade with, like 1 hour, potentially. Let's see. If you covered that, just about 25 pips. To get to 1 hour, you probably need to get to there. It has potential. You can probably just close the trade. So you could have avoided the loss, but it's just part of the probabilities. And sometimes your judgment will give you extra R, and sometimes your judgment will result in a loss. And at times when there is extra R, then it will cover up for times like these. So yeah, that's pretty much the end of day review. I did do an end of day fresh markup that I'll overlay at the end of this video. Other than that, we'll chat again for the London outlook tomorrow. Just a quick amendment I want to do to my end of day review. I've been capturing the data and then looking into the stop loss placement, and while I can say it's a judgment aspect, I also need to consider that there may be something that I haven't considered and I can learn from. And looking into it, I'm noticing that I'm just gonna hide the drawings. So I'm noticing that in this leg, so this was the POI I wanted to trade from, but in this leg there isn't any liquidity in the leg, which would mean that the liquidity in the leg is probably the extreme, right? And if we look at the extreme in context of the low of the day and the fib level where we put our stop loss, you can see the extreme is very close to our stop loss, in which case the stop loss didn't really make sense, given that the extreme is probably going to be wicked. And I guess now it somewhat makes sense why it was wicked and then continued upwards, which then leads me to a potential trade plan stop loss improvement aspect, where if there's no liquidity in the leg, then my stop loss placement must be considered as to whether, if I'm using the 11% level, is it too close to where the sweep may be? and if that is the case, then my stop loss should cover the low of the day, because that's the level that shouldn't be wicked. But I also need to remember that at the same time, even though there's no liquidity in the leg, it shouldn't affect my entry placement. My entry placement should always be fixed to be aligned to a POI and a fib level, so this entry shouldn't change. But the stop loss aspect can be improved. So I just wanted to add that, because it's a lesson for the day, and it's quite important to take these key lessons.